Hi friends, today I will teach you how to use stock screeners to pick great stock ideas. First of all, what is a stock screener? A stock screener is a tool that equity investors can use to pick stocks by specifying a set of stock screening parameters like PE ratio, dividend yield, profit margins, etc. Consider a funnel with a filter as a stock screener. Now you have thousands of listed companies in the market trading on daily basis. Now you need a handful of quality companies to invest. So the first thing which comes to your mind should be the stock screener. The purpose of stock screener is to filter thousands of listed companies to a handful of quality companies which you can take as a prospect to invest in. For example, New York Stock Exchange has about 2,800 companies listed. So the sole purpose of stock screener is to pick a handful of stocks from an ocean of stocks in the market. So how it works? A stock screener has three elements: a database of all listed companies, a set of variables, and a screening engine. Now the investor comes in and he wants to select a handful of stocks from a ocean of stocks in a stock exchange. Now the investor will key in the pre-specified variable, which might be of fundamental or technical in nature. Based on his pre-specified variables, the screener will pick a list of companies in his database which matches the criteria. There are two types of stock screeners. One is fundamental, another one is technical. Fundamental screeners are used by fundamental stock analysts, whereas technical screeners are used by technical stock analysts. The both fundamental and technical stock screeners were available freely, as well as paid services are available in the market. Some of few freely available fundamental stock screeners on the web are Google Finance, Yahoo Finance, and Finviz. Chartmill and Top Stock Research are some technical screeners which are available over internet for technical screening. Now we see a brief introduction on stock selection variables by using fundamental as well as technical. The fundamental stock screeners have predetermined set of variables like market capitalization, basic financial ratios, industry ratios, industry type, etc. For example, yes, investor wants to pick a small cap companies from the stock exchange. Now the investor will key in the market cap, or for example less than $300 million, so that he will get the list of all listed small cap company in a particular stock exchange. Apart from freely available stock screeners, there are also paid databases like Bloomberg, Capital IQ, which are available in the market. This subscription-based database provides stock screeners with more flexible and powerful features when compared to the free stock screeners available in the internet. Now, technical variables. Now, what are the technical variables we can use to screen the companies based on technical indicators? Few of them are like 52-week highs, bullish MACD crossovers, RSI indicators, etc. For example, RSI, which is Relative Strength Index, is a technical analysis variable that measures the speed and change of price movements from the price chart. It indicates oversold and overbought price levels for given stock. These pre-configured strategies can also be customized by changing the technical variables. Now we see the benefits of using stock screeners. As we saw, as stock screeners refine thousands of potential stock investment down to very limited investment ideas based on the parameters said. This saves considerable time for the investor. The stock screening parameters are very flexible, so they can be customized to obtain the required results. Generally, a growth investor seeks for a high PE company. The high PE company denotes that the investors are anticipating a high growth in the future. So the investors can customize the parameters based on their needs. For example, a value investor may pick stocks with low PE ratio, high return on equity, and low debt equity ratio. The criteria mentioned above is just a demonstration of different stock screening parameters. An investor can come up with hundreds of possible criteria to screen ideas and to pick stocks. So now we'll see how Yahoo Finance stock screening tool will help us to screen the companies. Consider a sample screen which screens for lesser leverage companies with an earning per share growth and return on equity growth of greater than 15%. Oh, 18 stocks match the below mentioned criteria. Screening the companies for the mentioned stock screening criteria in New York Stock Exchange resulted in 18 companies, which might be the potential idea for the investor to invest in. A sample Yahoo Finance stock screener look like this. Here the exchange is New York Stock Exchange, EPS growth of 16% and return on equity which is greater than 15%, and the debt to equity ratio of 1. This screen resulted in 18 stocks which matches the criteria. So these were the 18 companies or stocks which match the above criteria. So this is a starting point for the investor to do a deep research on the companies for his investment. There are also few limitations of using stock screeners. The first limitation of the stock screener is that the investor should understand that the screen result is not the analysis by itself. The screen cannot guarantee that the company which made all our criteria is the best purchase. The output of the stock screen should be researched deeper on different parameters to find the best purchase. So it is recommended for the investor to cross-check the data again from the stock screeners. Another major drawback of using stock screener is the ratios are industry specific. For example, a company in a capital intensive industry has more debt when compared to company which operates in non-capital intensive industry. For example, a company which operates in oil and gas industry will be of more debt than compared to a company which operates in a software industry. This is a very brief introduction of what is a stock screener, usage of stock screener, and limitation of stock screener. Thank you for listening.